Assalamu alaikum. Welcome to Last Week Today in Islamic Finance on Islamic Finance TV, bringing you top Islamic finance headlines from across the globe during the third week of April 2025. Here are some news flashes for your taste from the world of Islamic finance. Lucky Investments launched Pakistan's first Sharia compliant money market fund via an IPO, raising over rupees 50 billion in just 3 days, underscoring robust investor confidence in Islamic asset management. The Pakistan Stock Exchange welcomed a delegation of Malaysian Shariah experts to deepen cross-border collaboration and to boost Islamic capital markets, highlighting that more than 50% of its listed companies are Sharia compliant. Delegation included prominent Sharia advisors such as Ahmad Hizam, Baharuddin, Amir bin Shaharuddin, and others from Malaysia's Islamic finance sector. At the World Islamic Banking Conference in Singapore, Islamic Development Bank President Ahmad Ali called for linking Islamic finance to real economic activities like trade and industry. He warned against debt-driven models and urged global integration to drive sustainable, Sharia-compliant growth. He was joined by over 450 global leaders in this call for sustainable economic integration at the event. Prince Salman bin Sultan inaugurated the 45th AlBaraka Islamic Economics Symposium at Prince Mukrin University in Madinah, its 50th anniversary edition under the theme Islamic Banking in 50 Years, Past Achievements and Future Aspirations. And after concluding the scientific sessions and unveiling next year's theme, the forum honored pioneers, including Tan Sri Abdul Wahid Omar, for his role in Malaysia-Saudi Arabia Islamic banking collaboration. Abu Dhabi Islamic Bank halted trading on IDB's shares on Abu Dhabi Securities Exchange on April 17th, ahead of a planned strategic announcement. The nature of this announcement was not immediately disclosed, leading to market speculation. However, such halts typically precede significant news that could impact the company's stock price. Saudi Arabia's Tadawul All-Share Index dipped 0.7% to 11,552.98 on April 17th, with a turnover of Saudi Riyal 4.72 billion. The drop mirrors global market unease amid ongoing trade tensions, impacting key stocks like Al Rajhi Bank and Ma'aden. With this, we now turn to this week's featured deep dives. First, we will be looking at Pakistan's Islamic banking ambition in reality mirror. As we reported last week, Pakistan fell short of the state bank's target to raise Islamic banking deposits to 50% by January 2025, registering only 24.9% market share by December 2024. This setback comes amid a federal Shariat court directive to eliminate interest by 2027 and follows government and SBP measures, including incentivizing banks to open more Islamic branches and streamlining Shariah governance frameworks to accelerate the sector's growth. The shortfall underscores the challenges of shifting depositors' preferences, enhancing Shariah literacy, and aligning conventional banks' infrastructure with Islamic banking. Also, it raises questions about will of conventional banks, state and regulators to implement constitution, or will of people, translated to Islamic finance implementation. See our public opinion-related videos in this regard. Next, let's talk about the growth of Islamic finance in West Africa. West Africa's Islamic finance assets have surged, driven by Nigeria's leading Tadawul market and regulatory reforms in Senegal and Côte d'Ivoire. Key developments include the introduction of sovereign Sukuk by Ghana, the licensing of Islamic windows by regional banks, and capacity building initiatives by regional central banks to standardize Sharia compliance. With a compound annual growth rate exceeding 15% over the past 5 years, West Africa is poised to tap a projected $20 billion market potential, offering opportunities for project finance in infrastructure and green energy under Shariah principles. And in our final feature, let's look at Uzbekistan's quest to build a Sharia-compliant ecosystem. Uzbekistan aims to tap the global $4 trillion Islamic finance market for its largely Muslim, agrarian economy, Yet local banks lack formal Salam products despite thousands of farmer inquiries after a couldn't use video on Salam contracts. In July 2024, the central bank authorized MFIs to offer AAOIFI-aligned Islamic services, and Moody's notes May 2024 draft legislation for Islamic windows could unlock an initial $5 billion. Fitch Ratings warns that sustainable growth hinges on a full legal framework, complete with a national Shariah board and modern capital markets law. That wraps up this week's episode. Stay tuned for more updates next week on IFTV's Last Week Today in Islamic Finance. Do subscribe our YouTube channel and follow us on Facebook and Instagram. Comment, like, and share this video.